So the first tip is have proper insurance. And I'm sure a lot of us will have homeowners insurance and kind of some of our health and life and disability insurances. But what I'm talking right now is property insurances. So flood insurance is a very popular one. If you live in a flood zone and you have a mortgage that is backed by a government agency, you may have to have flood insurance on your property. And if you do, you probably are aware that it can be quite expensive. Now, because you're not in a flood zone does not necessarily mean that you don't need flood insurance. If you're close to one, you absolutely might benefit from getting it. And it might be quite a bit cheaper than it is for the people that are actually in those flood zones. In fact, I saw a number that 20% of flood damage is outside of flood zones. So just because you're not in a flood zone right now, one, doesn't mean you won't have home damage from a flood. And two, it also doesn't mean that those flood zones won't change. So they're redrawing the maps regularly on those types of things. So it's really important to know what your risk is. And a lot of people think that homeowners insurance covers flood damage. In fact, it really does not. So rising water that engulfs your home is something that is usually not covered. The other one is earthquake insurance. You may not know that you can actually have it, especially if you don't live in a active area for earthquakes like the Pacific Rim, but you can absolutely get earthquake insurance. And they actually say that damage from earthquakes is one of the things that can really bankrupt families quickly, because if your home, maybe it's a couple $100,000, is not covered by your insurance and damaged by an earthquake, you may owe money on the home and then never be able to recover from it. So earthquake insurance will usually cover 85 to 90% of your home if you have damage from an earthquake, which can be substantial, but it certainly leaves you some exposure. But having 10, 15, or $20,000 of exposure could be a lot better than having 100, 150,000 or $200,000 of exposure or more. Earthquake insurance also can't be purchased right after earthquake. So there's a period of time between the last event and when you can even actually buy it. So it's not something that you can buy last minute. So for the people recently here in Southern California that experienced an earthquake, they can't even buy it until that period of time expires. Now, you don't have to be in California, and I don't mean to single them out. If you look at this map, you can see that there are lots of places, including Southern Illinois here. I think it's the New Madrid fault line is a very active fault line and can cause a lot of damage. And a lot of places that you haven't had any seismic activity for a while is not an indication that they won't. It can be an indication that you might be overdue. So as you're thinking about, hey, do I need flood coverage? Do I need earthquake coverage? And if you do, explore it, especially if you're not close to these central areas for earthquakes. The coverage for earthquake coverage is much, much cheaper. So it actually can be quite affordable.